Hi, welcome to another episode of the Casino Update. This is not financial advice. I am a financial advisor. This is strictly educational, really just for fun. And ultimately, do your own due diligence when coming into these investments. Do not go into it wholeheartedly. Allocate 5% of your portfolio at max to this. So welcome to the channel. So as you know, every month, kind of do a little capstone to see what happens, covering these called ETFs and swaps, investments, and using these high yielding dividends to pay down margin aggressively to, grow your portfolio. I did a lot into last episode because there was into the RoundHill strategy as I was doing a buying portion of that. So I'm going to make sure I'm hitting on the other ones as well. RoundHill, YieldMax, Kurv, Rex, YieldBoost. So seeing how this last month went and then kind of where we are at today. So overall with the RoundHill strategy, we are now in the green in a couple of these, but I don't really exactly hold my breath all too much because you see still pretty, damaging results, even though we're in green in 3 of those other securities. Now, I would be remiss if I don't remember my days over there at YieldMax when, it was up like 22%. And then, ultimately we see what ended up happening with it. So projecting for 2026, at one point, this was a really high paying stock over here. We can kind of see where, this thing was just really shelling it out. And it was just a really solid investment. They were making really good trades. The company, as volatile as it was, it still kind of made sense. 16 to 20, and it started just really going down. But, for a time being, there are some really juicy dividends in there. But I digress. So going back to RoundHill, we'll just kind of see how this overall, how long it stays, and then we'll just kind of go from there. Didn't invest into the YBTC, but, just kind of tracking it, see how things are going from this month of May. Overall, the NAV was doing pretty well. I'm starting this one a little bit early. That's why we don't have this particular closing date value, but just kind of seeing what's happening with the dividends and, what's going on with the NAV. NAV a little bit going down, but where we're already at 29, still a steady decline. It did have a small little dip and then it tried to go build up. But if we look at where it was in February to where it is today, that's a plus. So just keeping my eye on it. NVDW, right over here, the month of May. It's had some really good dividends that have shelled out here in the last couple of weeks. And if we look what's happening in the NAV, the NAV actually ended up on a high note from where it entered in May. And then if we see where we're at the beginning of the year, 40, 39, 84, not too shabby. As long as it can kind of keep that same NAV, why distributing this is why this is ultimately playing out as well as it is. So going into the strategy was always kind of like, hey, can we maintain NAV while paying down the margin via dividends? And eventually the margin will pay itself off, and then you'll just be cash flowing with a higher amount of securities from the leverage position. Going into TSLW, and speaking of Tesla, Elon had kind of mentioned that SpaceX might be merging with Tesla later on. And with him controlling 85% of the stock from the SpaceX IPO that's coming down the way, if he decides to push forward with it, there's not going to be a whole lot to stop him from, Tesla merging into SpaceX. And then that changes the whole dynamic of this vehicle, which, I'm sure the Tesla stockholders are going to be wondering like, hey, how am I going to be compensated for this? Is it going to be a buyout or a one-to-one transfer into SpaceX? As the SpaceX holders are going to be wondering, is this going to be a fair valuation for this company to merge with? So a whole lot of valuation issues kind of come into play here. So we'll see what ends up happening. Going back to the ticker TSLW, we can see in the month of May, overall, it actually did kind of go up on the overall NAV. We started at 23, we're at 26. And then if we look at the big picture from this year, starting at 32 to 26, yes, there has been some decay. Has it been that bad? No, not that really. Still gone down, but we had some recovery. At the lowest point we see it was over here in $21 at the beginning of April. So will it kind of bounce up, and can we get some, more traction with this? We'll see. Hopefully we can turn this red into a green. Going to COIW, this is going to be the income-based ETF off of Coinbase. And as we know, it's been a real tough market for, Bitcoin. And this one has just been taking a beating. You can see that, in the beginning of the year, it was at $22, now trading, less than 11. That's a 50%, decay rate on the NAV. So hopefully it can stop it, but does it look like it's going to? No, probably not. And if it can't do anything to stabilize the NAV, once we get closer to a $3 range, it would be indicative of it going into a reverse split. Maybe, 1 for 10 or 10 for 1, I'm trying to say. But nonetheless, they got to do something about this. And maybe that's just paying out less of the dividends over here to make sure that they can keep this one solid. Moving over to the Palantir, PLTW, the month of May, not a whole lot of deviation in the NAV, slight decay, but that's okay. It's minor, but still not great from where it is. Where I started at the beginning of the year at 36 and now at 20. And the dividends haven't been all too shabby, but it's all right. Maggie, which I actually bought more in the beginning of the month of May, so that was an additional 5,000 that came in. And we can see that the NAV decay on this one hasn't been that bad. And it has been a pretty constant dividend, even though it's gone down a little bit as the NAV's gone down, but pretty steady. Not like we're seeing with wild swings of 8 cents, 44 cents, 11 cents that we saw with Palantir, or if we look at COIW over here, 21, 17, 6, all over the place. That's kind of like Maggie, which tracks the Magnificent Seven, is that it's pretty consistent to what it does. And I think consistency is going to be the name of the game. Moving on to HOOW, this tracks the Robinhood. Man, it's also kind of seen that bouncing around with the dividends, 25, 11, 33, 29, just not a whole lot of consistency. And we had 49 cents over there, just kind of all over the place. And if we look at where it started at the beginning of the year and to where it is right now, you can see also more than 50% NAV decay on this thing. Though with Coinbase, it's a lot like Robinhood in a sense that they both are this gateway into the crypto universe. And Robinhood is now exploring AI agentic agents to trade on his platform. And hopefully that can kind of help, bolster up the underlying asset of Robinhood stock. So we'll see. MSTW, this is going to be trading off strategy. That's going to be Michael Saylor's baby over there. And he'll be the first one to tell you, Bitcoin all day, every day. And it's basically a holding company for it. And in doing so, we see the fair market value at 10 at the beginning of the year, now at 7. Will this thing, recover in time before it heads to Splitsville, USA, population Michael? We'll see. Not great with the dividends. I think they're just trying to keep this thing alive as long as they can. And then going over into Top W. This was previously as WPay, and then they actually issued out a new prospectus back at the end of March. So really kind of seeing, where we are in these last 2 months, it actually hasn't been too bad. Now, granted, talking about this one a little bit before we had a closing valuation on it, closing date, we can see that, 38, 38, 39, 38, which pretty solid all the way through. And ever since they actually did the change, we saw it going from this downward trajectory, 42 to 34, and then now we're seeing that 34 rise up. So hopefully they can continue to kind of let the NAV recover while maintaining some level of stability with the dividends, in which we're at 19, 18, now we're 30, 28, 31, 27, 24, 24. And this is also one, in the beginning of the month, we were ahead and we put another 5,000 towards this one. And that's how we see the overall dividend has increased. So we'll see. Overall, year to date, dividends received off this income portfolio, just shy of $15,000, and just tracking the amortization schedule on this thing. So as the money is coming in, it's paying down the debt. And ultimately, once the debt's all paid off, then, hopefully, we'll reevaluate, see what we go into next. I'm kind of thinking maybe a more structured note portfolio, but just once again, we'll see at the end of the year. Going into YieldMax, this is the original dumpster fire that sparked this whole idea. SMCY. This is going to be covering, SMCI as the underlying one, super microcomputers over there. And it did not do a reverse split like most of the other YieldMax, but it did, kind of suffer the same fate of the underlying and NAV decay. And overall, we see that the dividends have fallen from grace, no longer issuing up $2, but, where they are right now. So kind of continuing on, then we have Misty over here, underlying strategy. And this one did do a reverse split 1 for 5 back at the end of 2025 to kind of bring back up the NAV. And hasn't done much with it, just lose it. And because it has a larger NAV is why we see that there's actually these larger dividends out here. Doesn't mean that, these are great, because we can see that will history repeat itself? Yeah, probably. AIYY had a reverse split, last year. So it went from almost $2 up to 20, because that's what a reverse split, 1 for 10, multiply this by 10, that's where you get to the new one. And then you take your shares, divide it by 10 to get to your new shares. And ultimately, where is it at now? Great, you started at 20, now you're at, almost less than 9. You keep that up, this might be an annual thing for it. Then we have a TSLY, underlying is going to be Tesla, and this one did a reverse split. This is actually a second reverse split for this particular one. And it started off at 39 at the end of the year, and, right here at, 30, it's lost a quarter of its value. So even though it looks like I'm getting all these great dividends, but what work is it really doing for me if it's just working, to deplete it even faster? Murny, so MRNY, reverse split last year, boosted it back right up to $15, and it's actually maintaining it, which is quite impressive. Like, way to go, YieldMax. And at some points, the NAV actually did kind of really recover over here before going back down. So hopefully whatever they were doing inside here can continue, but do they have a great track record? No. But the underlying on this one is Moderna, and that's an interesting, company. Made its money back with the COVID and whatnot, and they're still doing a lot of cancer research. So we'll see, where this one ultimately takes us. Morrow. So this one kind of has tracking gaming ETFs and has not done a reverse split yet. However, looking at when 2025 at February is worth $25. Now it's worth about $6. So if it keeps this up by the end of the year, it could be suffering a reverse split or even faster. It just depends on what goes on with the NAV. Coney, underlying Coinbase, reverse split last year, got it back up to $46, and then ultimately it's lost almost half of that. Fiat, which is going to be the inverse of Coney, so basically, instead of being bullish on cryptocurrency, this one is more bearish. It went through a reverse split last year, got it back up to 25, and it's sitting at 21. So has been a lot better of a fund since, they've tinkering around with it. Hopefully they're able to do a better job of stabilizing the NAV, and then this might be something worthwhile again. Then Ulti went through a reverse split last year, got down to $4, and then, now back up to 40, because that's what a reverse split does, and it's hanging at 31. These last couple months, it's been pretty much, consistent at the 31. I mean, arguing, you can even say, hey, most of March kind of kept it in that same little range. It did kind of go down a little bit from, December, February, and January area, but, if they're able to maintain this consistent NAV and given, its dividends and its underlying assets, I do like it because they try to balance it out with more stable companies like Costco than just high volatility stocks. So this is always a fun one for me to go watch. Out of actually, SimC over here used to be like my favorite, but it's really Ulti that's been a crowd favorite from most people to kind of, put their chips in the pot on. So going over to Kurv, just kind of watching this one, I think it's done a lot better as a company, and maybe weekly paying dividends are better for the dopamine effect, but the monthly paying dividends are easier for the fund managers to help with the NAV as well too. So we see, KGLD over here, it's actually increased its dividend and while increasing the NAV. So, 25 all the way up here to 31. Not too shabby. KSLV, it did take a hit on the NAV, but all silver in March was a dumpster fire. But it stayed, paying at 75 cents per share. And, hopefully this can recover as a company, I think they're doing a really good job with how they're managing these income dividend paying stocks. So a lot of faith. KQQQ over here, same thing. I think they've done a great job. You can see how the NAV has increased, and the dividends, maybe not always a 41, but by going from 41 to 35, we saw that NAV, that drop, come back up. And that's what these fund managers should be doing over at RoundHill and YieldMax. You see your NAV dropping, maybe you drop your dividend and let your NAV recover. AMZP, underlying is going to be Amazon. We see it was at 50 because the NAV was dropping, and now they dropped the dividend at 35, and look at that. Look at that NAV recover. It's back up to where it was in 2025 ending. Could be over there in the beginning of 2025's numbers too. They keep that up. AAPY, this is going to be the underlying for Apple. Solid underlying, right? I can hate the product all day long, but I can love the founder for the curation that he made. So we see that it was doing 25 cents pretty consistently, and it looks like they're going to amp it up to 30. If it makes sense, it makes sense. Beginning of 2025 was at 24. They're at 26. Maybe it's time for that increase on the dividend. I love the ticker for this one. Goop. Underlying Google. So this one just had a big payout of 60 cents, a 15-cent increase from its previous 45. Overall, we have seen the dividends increase from, trailing the last 12 months to where it is today. And ultimately, if we see where it started to where it is today, by all means, increase your dividend. You have increased your NAV. Makes all the sense in the world. MSFY, this is going to be underlying from Microsoft. And, it had a really big dividend over here for 65 cents, but the NAV dropped. And then, they decided, hey, maybe that wasn't such a great idea. So hopefully this helps stabilize what they're doing right here. NFLP, this one, pretty consistent at the 30. What's happening over here on the NAV, we can kind of see it's kind of bounced around, not a whole lot of deviation, but not a whole lot of confidence to say, hey, great to go back up to 25, especially since you started at 36. And then TSLP, underlying Tesla. This one, we can see the dividends over here started off quite high and robust and have been decreasing. And unfortunately for this one, $10 NAV decay, that's basically at 2/3 of where it used to be. Hopefully take some of those lessons from over here and help stabilize the NAV. And I think that's what they'll go and do, because they do have fund managers who know what they're doing. Moving over to Rex. They brag and boast about growth and income, but is that what we see? No, sir. COII, underlying Coinbase. This NAV is all over the place. Just this year alone started at 15. Now it's just less than 9, and not great with these dividends. But then again, I'd rather you stabilize the NAV than be issuing out the dividends. But a lot of work. I'm not a big fan of Rex shares over here. Then going over the MSII, this is going to be off of, strategy. It's been a dumpster fire year for the underlying. It's reflected over here in the NAV as well. Currently sitting at 7, falling from grace at 24, and just issuing out, mostly 4 cents dividends throughout. NVII, so now we're looking at Nvidia, and Nvidia had its earnings. It's been great for the stock, basically propping up the whole market. If Nvidia goes, this market goes. So in Nvidia, we trust. And then we can see that the NAV this year, not a whole lot of deviation from it, just $1. And then, where it was in the beginning of 2025 at 26, and where it is right now at 27, not too shabby. Not too shabby if it can consistently do that. But then again, we like the underlying. Tesla sits pretty high too. Granted, it's had its own volatility, but doesn't mean that we're always going to see that stabilizing NAV. The underlying does have a lot of impact, especially depending on what kind of trades or what kind of covered calls they're doing, especially if it's an iron condor strategy. But we can see in the beginning of 25 it was at 23. It's now sitting at 19, and just kind of tracking the distributions. FEPI, I like these last 3, at least on these ones, because now it's going into like a basket of a bunch of different trades, a bunch of different underlyings. And I think it's more diversified that way, and that's why we see better results with it. Not as high as a 90 as it was in April, but hopefully the NAV is going to stay relatively the same. AI, PEI. This is going to be, tracking more of the AI stuff. It was issuing all these $1 in 25. I'm hoping this is just a way to kind of help stabilize the NAV over here and maybe bring it back up. They're not a great fund. They don't have a bunch of great fund managers over there. Don't have a lot of faith. So we'll see. Same thing for this one, CEPI, 27 cents dividend, and we see they're issuing at over $1 before. Hopefully they can bring up their NAV on it because of it. And the last one to kind of go over is going to be YieldBoost. To start from the left, moving right, TSYY. This one is going to be going into a reverse split next month, so just kind of annotating it. So 1 for 8. Will it be enough to kind of change where it's going? Unless they change what the underlying is doing, well, not with the underlying, but the underlying investment strategy, man, it's just going to just be rinse and repeat all day long with these things. SMYY, it was not announced to go do a reverse split, but it's going to be heading there fast, probably there by the end of the year. PLYY, it's nice. Most of YieldBoost, I mean, that's what happens when you're over 100% yielding on these things, is the NAV just falls so quickly. Even with Nvidia, as great as it's been, we look at, starting at 26, we're not half that. You can pay all these high dividends all you want, but the NAV is just going to fall recklessly. MTYY, this one's got a reverse split coming up here in June as well, at $4. Just been issuing out these minor ones. And then HOYY. This is going to be underlying for Hood, which is Robinhood. Would not be surprised if there's going to be a reverse split over here in the next couple months, especially with how fast this one's dropping too. COYY, this one's having a reverse split next month. And, I wouldn't be surprised if it just continues that same trend. XBTY, it's going to be heading towards that reverse split there too. Going to be soon. They didn't announce it, but, I wouldn't be surprised in the next couple of months. And then AMYY. Underlying is for MD. And I like the underlying. It's just this particular fund is just high yielding. So that's what we see. Well, I hope you enjoyed this episode of The Casino. And as always, if you like it, hit that like button, hit the subscribe, and stay tuned for more installments and maybe some other financial tidbits. Once again, this is not financial advice. Do your own due diligence. Do not go 100% into these things. 5% maybe at most. And as always, thank you and have a great day.